Mortgage rates just jumped to their highest levels in 3 months as the US and Iran go to war. This could have a huge impact on you as a buyer, even as a seller, if you don't take action and take it fast. Today, I'm going to break down for you exactly what is going on and what you need to know that could save you thousands of dollars per year if you're buying a home now or in the near future. But let's put this in perspective first. The mortgage market does not like uncertainty or surprises, and the US engaging in attacks on Iran, and then ultimately Iran retaliating all across the Middle East in places like Dubai, Saudi Arabia, definitely qualifies as both of those things. It is both creating uncertainty and it was a surprise. People didn't know what was going to happen. And so that always results in chaos in the mortgage market. This happens every time something like this occurs. Anytime there's an attack, anytime there's a surprise event, the mortgage market reacts emotionally. That's exactly what you're seeing right now. So the mortgage market really does not love this, and that's why you're seeing rates jump, and that's why you're seeing them jump fast. Just this week, I had a buyer put an offer in on a home, and the rate that he was quoted at just days before had jumped $300 a month by the time we actually got the offer in. It completely changed the financial scenario and the feasibility for him to buy the house. So let's take a closer look at the numbers and how this actually could impact you. A 30-year fixed mortgage was averaging around 5.98% just a few weeks ago. It's taken us a very long time to get below 6%. In fact, if you go back to 2022, that's the last time we had rates that were that low. So it's taken us a very long time to get back to a number that starts with a 5, and there was a lot of optimism that this was finally happening, rates are finally dropping, and things are going to open up. But now, just a couple weeks later, that same 30-year mortgage is at a 6.22% or higher. I've seen as high as 6.33%. If you go to Google and you Google 30-year mortgage rates for Freddie Mac, you can see the chart showing you when these mortgage rates spiked, and it happened right as the U.S. attacked Iran, okay? And now we're watching it kind of go up, go down, but it's been trending up aggressively this week. And this might not sound like much if you're buying an $800,000 house and putting 20% down, but it does come out to about $100 a month difference. That's not insignificant. So, I mean, $100 a month definitely adds up. We also have to keep in mind that lenders use what's called a debt-to-income ratio when they qualify you for the mortgage. And what this is it's your total debt payments per month. That's going to be cars, student loans, credit cards, all of those types of things, fixed debt payments basically, plus the mortgage payment divided by your gross income. And that gives them that ratio. That ratio can only go so high. So in some cases, this bump up in the mortgage rates could actually make the difference between being approved on a house and not being approved for that house. So some people are literally right on that line where it's like down like 0.1% rate. So what about sellers? Is this going to impact you? I know a lot of sellers are probably wondering, how could this impact me and what would be the implications of this? Well, the housing market also does not like uncertainty, just like the mortgage market, okay? So when there's uncertainty, what I have seen over the years of doing this is most people hesitate to make big financial decisions. Things like buying a house, buying a car, they want to know what's going to happen before they have the confidence to move forward. So when there's things like wars going on, a recession going on, massive unemployment happening, foreclosures happening, anything like that, you see a pullback in the housing market. It just consistently happens. So you're likely going to see less buyers in the markets as this drags on. It ultimately could mean that your house sits longer or that you have to be more aggressive on price to actually get it sold. So this is really not good news for buyers or sellers. If you are buying, what should you do at a very tactical level? Well, first of all, you should take advantage of the opportunity when other people are too scared to buy and go negotiate a great deal. Like there are some awesome deals to be had right now if you're bold enough to be a buyer. You know, Warren Buffett always says, buy when other people are selling, and that's that time right now. A lot of people are too scared to buy, and if that's you, I get it, but there's a very unique opportunity right now to get a great deal because there's just not as many buyers. So if there's less buyers, you can get a better deal on what you're going to buy. So you could negotiate price, concessions, all those things. The second thing that you definitely want to do, you want to lock in your rate as early as possible. This guarantees that if we have more rate chaos and more rate jumps, it's not going to impact your house payment, okay? So very, very important to do that. Lock your rate, talk to your lender about that, see how early on they're gonna let you lock that. It varies from lender to lender. The third thing that you should do as a buyer is ask the seller to give you closing cost credits to buy the rate down or use a 2-1 buy down rate. A 2-1 buy down program gets you a 2% lower interest rate the first year you have the mortgage. The second year, it's a 1% lower rate. And then years 3 and onward, it's at that fixed rate, which, like I said, it's about 6.22% right now. So it gets you an interest rate that's in the 4s right here on year 1, the 5s year 2, and then hopefully by later on, the rates have actually drifted lower and you can refinance the house. But you kind of know the worst case scenario going into it. This is not an adjustable rate mortgage. A lot of people think it is. It's not. It's still a fixed rate mortgage. It just has a temporary buy down for the first 2 years that you have it. Definitely look at that program, talk to your lender about it, and then ask the seller to pay for it. If the home's been sitting there for a couple of weeks, maybe a month or two, then that seller is going to be motivated to sell their home and go fight for those concessions. Your agent should do that for you. So there you have it, the update on what is happening right now in the housing and the mortgage market, right down to the very minute. Like, share, subscribe to our channel so you get notified about new videos that we post each week. We will always bring you current news and interpret what it means for you as a buyer, seller, homeowner, or just someone that's curious about what's actually happening, that wants to separate fact from fiction, okay? And if you're thinking about buying and selling in the future, of course, we'd like to help you. We've helped over 1,600 families make a move right here in Snohomish County. You can click the link with us, or click the link below to fill out a form to work with us. We work with qualified buyers and motivated sellers each and every day. We'll review your form and we'll reach out if we think we could be a good fit to work together. I'll see you on the next video.